Hi, I'm Kyle D'Souza, and this is the WA School of Mines Alumni Podcast. Joe McDiarmid is an experienced mining engineer with RPMGlobal, and he understands that the true value of a mining project is critical to both the parties trying to sell themselves and the astute buyer who wants value for money. Joe McDiarmid, welcome to the show.
Thanks, Kyle.
What type of people or organisations engage RPMGlobal to value projects on their behalf?
Being an international listed, ASX listed company, we have a lot of international banks that we work very closely with in various different areas around the world. Personally, I've worked with them in Russia, China, Africa, in Peru just recently, here obviously in Australia. And then we also have a lot of investing clients, and we also have a lot of different companies that engage us to do those technical reviews so that we can go and help them form an opinion on different assets.
What do large-scale private investment firms and individuals look for when they invest in mining projects?
The large scale or the bigger banks, they'll look at things in a different light where they've got a very set structure that they need to adhere to understand the risks and the opportunities of different projects. So a larger bank may engage us where we may end up starting off doing a fatal flaw analysis, where we work into technical reviews before we go into the full due diligence sort of scope of work. We focus primarily on geology, mining, and metallurgy, and then we'll use supporting sub-consultants to help us for more specialised skill sets, from environmental, geotechnical, infrastructure, et cetera, et cetera. We focus more on the mining technical due diligence.
What are the typical ways that investors will appraise a mining project that they're looking to invest in?
A bank will look at it from more of an investment sort of opportunity and a project finance, so that they can understand and repay those loans. Mm-hmm. Whereas we'll have different investment groups and they'll be looking at various different levels of detail where particular things that they think that they can improve on or have that opportunity that's a little bit different to the previous investors.
And what's the difference between, say, due diligence and a technical review?
A technical review is something, if we sort of break it back down to four different areas, where one being a fatal flaw. Fatal flaw is we'll look at what data is available and we'll go through in a matter of weeks and try to identify any issues that will be a fatal flaw for the project. Then we'll sort of move on to like a technical review where we'll break it down into different areas, and we'll spend somewhere between 6 to 8 weeks looking at the available data and understand what those opportunities are and where the potential flaws are. And then we can move on to things like a full due diligence, which could take months. And depending on the client's needs, we may end up doing independent expert reports for various different banks, and that can take several months depending on when data is available.
Can you describe some of, I'll say, 3 of the fatal flaws that you see most commonly on mine sites?
One of the biggest challenges we have is getting data that's repeatable and auditable. People do some amazing work, but if they don't communicate that amazing work and they don't show the background of that work that they've done, how they've done it, and just as importantly, why they've done it, why they've chosen that path and why they haven't chosen other paths, in terms of mining methods, in terms of how they've developed their cut-off calculations. What are those modifying factors that they've used to determine those modifying factors? What metal prices have they used? What operating costs have they used? How have they calculated those loss and dilution factors? So one of the biggest things is having the supporting data to come back to, making sure that in their mine plan that they have built in sufficient time for incorporating the social and historical information that is associated with it. Making sure that there's sufficient time to have that ramp up, making sure that there's sufficient time to clear and obtain the correct leases and permitting.
Technical reviews can often be seen as, in hindsight, a company should have done this, but is there any value before a company even starts that scheduling process in getting someone like yourself out to site?
A lot of decisions have been made historically based on the information they had at that time. And then new information comes to light. And documenting those changes is probably one of the key things. One of the biggest influencing factors is metal prices. When I first started mining, the gold price was around $300 an ounce. Back then, I just thought it was normal that you had to go and get written permission for a pencil and a piece of paper from the mine manager. So things have changed. Because of those changes, say for metal price, a lot of areas have been sterilised. In hindsight, it would have been great, but that was the decision at the time, and it was based on a heap of assumptions and parameters that were identified there and then. I'm in a unique position where I do get to go in after the fact and go and see where people have done things wrong, and I can learn from them. It's always good to okay, well, look, this is the learning curve. This is an opportunity. This is something that we can actually make it better.
When you go out to a mine site to review a company, what specific things are you looking for as a mining engineer?
It comes down to the data room. You'd be surprised at how many data rooms are put together at the last minute.
Define what you mean by data room.
Sorry, the first port of call that we're going to get is some form of bulk data that we're going to receive on the asset. And people have to recognise that when we're doing these reviews, these fatal flaws, technical reviews, due diligences, independent experts reports, we have a limited time, and we really need to understand the history of the project, the future of the project, and to understand the challenges and the opportunities of that project. So getting the data in a comprehensive format that can be split into the different disciplines, that can be presented in such a way that obviously has the summary, but then has a reference to the supporting information for that summary. Case example, we've got mining loss and dilution factors that we're going to look at. Okay, well, our mining loss and dilution is X, Y, and Z. The way that we've sort of determined what this mining loss and dilution factors are is because of we can bury down and we go, okay, well, we've done this reconciliation work here. In this particular location, we've got challenges with a hang wall and footwall, and this is how we're overcoming it, but it has resulted in this loss and dilution. So, they're the sort of things that make our work a lot more cost effective and time effective.
Have you noticed an increase in the level of mining investment over the last year?
Particularly in the last 6 months, we've really noticed a lot of projects that people are wanting to invest in, more larger scale, and then multi-asset reviews as well, not only locally but also globally. Various different range of commodities, predominantly I'd have to say precious metals and base metals. Of course, battery metals, minerals rather. Everyone's pretty excited by that at the moment and want to have something like that sitting on their portfolio.
What countries are you seeing start to invest in mining?
Obviously, Australia really is the forefront in a lot of ways and has such a diverse range of different commodities and different skill sets. Just recently, we've done a heap of work out of South Africa, Sweden. Saudi Arabia is really starting to pick up now.
For mining?
Yeah. So the King's just made a decree that mining will become the third pillar of Saudi. And so there's a whole lot of investment being made. We've done a whole heap of work, believe it or not, in gold out of Saudi. You wouldn't know it, but they do have quite a few gold assets, and they have various other assets that underground and open pit and different quarries and different mining methods that they are investing in, and just as importantly, looking to expand now. But also obviously Canada, the DRC, Turkey really has had a bit of a push at the moment. Obviously the stands as well. We're sort of seeing quite a bit of movement there. So I'm kind of fortunate in that being a global company with one P&L, we are not very isolated in terms of office to office. We don't compete within each office. We put the best person on the job regardless of where that location actually is.
Any predictions on what commodities investors will be looking to invest in?
I'd probably be a very wealthy person if I knew the answer to that. But look, I'd be I can say that the trends at the moment, obviously, everyone's really excited about battery metals. We're seeing a lot of lithium and of course cobalt work coming through. Gold in Australia in particular, it hasn't been this good ever. I mean, it's fantastic. And there's a lot of really good assets coming around. We're starting to see even movement now in things like copper. There's quite a lot of opportunities that people are really starting to really look at now. In the past, they were mined based on the previous assumptions. And now with modern mining techniques, better metal prices, better processing opportunities, it really does make a big difference. And all of a sudden, some of those old assets that were third, second tier are now really starting to come into fruition.
Joe, thank you so much for making time to join us.
My pleasure.
That was Joe McDiarmid, Manager Australasia and Russia of RPM Global.